Hello friends. Whenever the UPSC aspirant read economic survey and budget, he generally got confused in the special terms that are mentioned in survey and budget. These terms are very important because UPSC in prelims exam generally asks these terms directly. And if you don't know about these terms, then in that case, first of all, the question will get wrong. And secondly, you are not able to analyze what the budget and what the survey is. So in this particular video, we will discuss these key terminologies because they are very important for exam as well as for understanding of economic survey and budget. It is quite essential. So let's move with the first word, that is what is GDP. GDP is total monetary value of all final goods and service produced within the border of a country during a financial year. So GDP is gross domestic product. Usually, it there are three important words here. First is total monetary value of all final goods and services. That means monetary value means that can be exchanged in form of money. That means informal activities are not the part of GDP. Any kind of work that is done without any amount just for satisfaction, love, emotion, it is not included. Then final goods and services, that means raw material or intermediate goods are not the part of it. Then within the borders of the country, that means in states, UTs and 12 nautical mile from the base. Apart from that, during a financial year, that means from 1st April to 31st March. Even all those works that were done in Indian embassies situated in other countries are also the part of our GDP. So this is the meaning of gross domestic product. Next is real GDP versus nominal GDP. What is this real GDP and nominal GDP? So nominal GDP is a kind of GDP which can be increased because of two factors. First, when the quantity increased, and second, even the quantity remained the same but the prices increase. That means nominal GDP is calculated at current market price and it is not adjusting the inflation. That means inflation is not adjusted in nominal GDP. Let's take a simple example. Suppose in year 2023, a country produces 100 bat and ball whose value is 5,000 rupees. So nominal GDP is 5,000 rupees for 2023. In next year 2024, again they produce 100 bat and ball, but the prices increases. As a result, the production cost goes to 6,000. Now even in that case, the production is same, but still because the increase in price, the nominal GDP will show the show the increased number. Whereas the real GDP is an accurate measure of economic growth because it adjusted the inflation. Here there is increase in quantity only is measured, and that quantity increase is multiplied with the base year's price. That means the prices in the base year is multiplied with the quantity. So if the quantity increase, then only the real GDP shows the increase in number, because here the prices are inflation adjusted. So whenever we talk about the real GDP, it is calculated at constant price or base year's price, whereas nominal GDP is calculated at current market price. Then the next is gross value added. What is this gross value added? Whenever we talk about the GDP, it shows a particular number, like GDP of an economy is 8%, 7%, 9%. But this GVA talk about how this 8% is actually made. That means the sectors of the economy, how they are contributing in the overall GDP. Let's say if we are saying primary sector's contribution is this much, secondary sector's contribution is this much, tertiary sector's contribution is this much. That means this sectoral analysis of the economy is done by this gross value added. And that is the reason why this GVA is so important, because if a particular sector is not performing well, government will develop a specific policy or program related to that sector. Let's say, as we all know, our secondary sector is not doing that exceptionally well in comparison to service sector. Now, as a result of that, government launches PLI scheme, Make in India, Atmanirbhar Bharat. Similarly, if the government feels that agriculture sector, specific sector is not doing that much well, government develop a specific policy for it. So that is the reason this gross value added is very important. And how this GVA is calculated? That is value of output minus intermediate consumption. For example, if a farmer sells the sugarcane to a mill for 100 rupees and that mill produces sugar of 150 rupees, then the GVA is 50. That is how much addition is done. So value of output minus intermediate consumption is GVA. And how GDP is calculated from GVA? GVA plus net indirect taxes. That means GVA plus taxes minus subsidy. So this is how GDP is calculated. Then the third point is again very important, that is regarding to inflation. Why this inflation is so important? Because the monetary policy of economy as well as fiscal policy get change or adjust according to this inflation only. So what is inflation? Inflation means sustained rise in price of goods and services over a period of time. That means there must be a continuous increase in price of goods and services over a period of time. It shouldn't be like that. Suppose once the price increase, again it get decrease, again it get increase. That is not inflation. Inflation is only when the prices keep on increasing. That is inflation. And during the inflation, the value of currency actually fall, and that is the reason whenever the demand is more than inflation, it is called as demand is more than supply, it is called as inflation. Inflation can be happen because of two things. First is demand pull inflation. Demand pull inflation means when the aggregate demand is more than aggregate supply. And how this aggregate demand increases? If suppose the person's overall income increases, or if the government actually do more expenditure which will fetch more income for the people, like expansionary fiscal policy or fiscal stimulus. Another is cost push inflation. Cost push inflation means when the demand factor not, it is because of cost factor the things increase, the price increases, like the price of raw material increase, taxes, government increases the taxes, supply chain bottleneck happen, or we war kind of situation happen. As a result of that, the prices of goods and services increase. It is called as cost push inflation. Then the next is what is CPI versus WPI. This is again a very important component. CPI and WPI are two different things. CPI inflation is help to know how much inflation is at retail level. While calculating the inflation of the economy, RBI considers CPI inflation as a key measure. First, the reason is CPI include goods and services both. WPI include only goods. This is the first difference. Second, CPI inflation in its overall composition, the more weightage is given to the food items. Whereas if we talk about the WPI inflation, it give more value to the manufacturing products. So if the prices of manufacturing products increases, WPI increases. So why RBI use the CPI measure to calculate the overall inflation? Because it actually include all the demand of goods and services at retail level. That's why CPI inflation is more important while doing the inflation targeting. And this inflation targeting is done by RBI. So inflation targeting is 4% plus minus 2% for the current times. That means if the inflation remains between 2% to 6%, that shows that the inflation is under the control for the economy. So WPI and CPI, the major difference is WPI include goods, CPI include goods and services. CPI measure inflation at retail level, WPI include inflation at wholesale level. Third difference is in WPI component, highest weight is given to the manufacturing items, while in CPI the high weight is given to the food prices. Then headline inflation versus core inflation. Now what is this headline inflation and core inflation? Whatever the goods and services produced in the economy, it is measured under headline inflation. And why core inflation is calculated? Core inflation is calculated so that we can exclude the volatile items whose price fluctuate a lot. So under the core inflation, we exclude the prices of food and energy articles. That means these food and energy items prices increase, they are increases a lot. So they are very volatile. So that is the reason while calculating the inflation, government talk about the headline number as well as core inflation. And this core inflation is very important. Recently in EPFO exam also, UPSC asked this core inflation. So headline inflation include all the goods and services, while the core inflation exclude the prices of food and fuel items. And there is one more kind of thing, that is refined core inflation. It excludes food, energy and fuel prices. Now moving ahead, next is regarding to the budgeting topic. What is capital expenditure and revenue expenditure? Revenue expenditure is a kind of recurring expenditure, continuous expenditure. That is a kind of short-term expenditure, like government is paying salaries and pension, government is paying interest, government is paying subsidies. This is all included in revenue expenditure. Then what is capital expenditure? It is long-term and asset creating. That means that expenditure which in long run create lot of infrastructure as well as asset creation. Creation of airport, creation of railway stations. This is what capital expenditure is. So the more the capital expenditure and economy is doing, the more chances in long-term revenue growth. Then there is one more term we talk about, that is capital receipt and revenue receipt. Revenue receipt include all those things that is short-term income of government through fees, penalty, fines, through dividend, through interest received. And another is capital receipt. Capital receipt are of two types. debt creating and non-debt creating. So debt creating means any kind of borrowing the government done, it initially shows in capital receipt, but you need to pay it again. That's why it is not an revenue generating kind of a thing. Whereas non-debt creating capital receipt is when the government generate revenue by disinvestment or recovery of loan. So there are three types of deficits. First is revenue deficit. Revenue deficit is when revenue expenditure are more than revenue. That is revenue receipt. What is revenue deficit? When revenue expenditure are more than revenue receipt. What is fiscal deficit? Total expenditure is more than non-debt creating capital receipt. Non-debt creating capital receipt. I'll write down here so that it will not create any confusion for you. Non-debt creating capital receipt. So what is total expenditure? What is fiscal deficit? When total expenditure is more than non-debt creating capital receipt. We will not include debt creating capital receipt here. And what is primary deficit? Fiscal deficit excluding interest payment. That is primary deficit. In 2025, UPSC asked a question on both these terms, fiscal deficit as well as primary deficit. Then next is what is tax buoyancy. Tax buoyancy talk about responsiveness of tax revenue to GDP growth. Like how the tax system can be made which enhances the overall contribution of tax in GDP. So the GDP can be created through two forms. One is through tax and one through debt. If the more of tax to GDP ratio is there, that shows that the tax collection is contributing a lot in GDP. And if there is more of debt to GDP ratio, it is a problematic situation because you need to pay interest on it. So the more the tax to GDP ratio in the economy, the better it is, and the less the debt to GDP ratio, it is better for the economy. So tax buoyancy talk about how the tax contribution increases in overall GDP, and that can be increased by better compliances, by a friendly tax administration or tax norms, simplified tax norms. This is all enhances the tax buoyancy. Like that, honoring the honest platform, all these faceless assessment, faceless appeal, citizen taxpayer charter, all these things enhances the tax buoyancy. Next, there is a term called as direct benefit transfer. With the when the current government won the election, they focus a lot on this term direct benefit transfer. Earlier, what used to happen, the things were being paid in cash, so usually there are chances that corruption may occur. But because of this direct benefit transfer, the amount directly go into the bank account of the farmer. Popularly, it is linked with JAM Trinity, Jandhan Aadhaar Mobile. So subsidies benefit directly go into the bank account. It reduces the leakages. Like for example, under PM Kisan scheme, 6,000 rupees given to farmer in 3 installment, and that is the example of this direct benefit transfer. Now, a very important term, and it is usually important because of current times, that is current account deficit versus balance of payment. So what is current account deficit? Current account deficit have different component, but majorly if we talk about when the imports are more than exports, we can say the current account deficit prevail. Similarly, what is balance of payment? Balance of payment is systematic record of all transaction happen between the residents of one country with other. That is balance of payment. So balance of payment include the current account, capital account and financial accounts. And this current account deficit is a kind of a concern because if the current account deficit keep on increasing, that shows that the country is importing more and exporting less. Whereas if the balance of payment is more, it is unfavorable only when the country doesn't have the sufficient resources to take care of this balance of payment. Okay, so this is the difference between current account deficit and balance of payment. Now, there are specific terms that is like disinvestment and privatization. What is the difference? So disinvestment usually have two types. One is minority disinvestment, another is majority disinvestment. Suppose a government PSU sell 20% of its stake. Still they are owner because they are holding 80% of the shares. So it is minority disinvestment. But suppose they are selling 60% of the stake. In that case, it is called as majority disinvestment because now they are not the owner of that organization. So still they hold the 40% stake, but the 60% stake held by someone. And what is complete privatization? When they are giving 100% ownership to the private organization. Next, repo rate. This term usually you will see a lot in the newspaper. What is this repo rate? Whenever the commercial bank needs fund, the RBI provide them funds that is at rate that which is called as repo rate. In return, these banks also deposit some government securities. So this repo rate adjusts according to the inflation. If the inflation is more, RBI increases, Monetary Policy Committee increases this repo rate, and if the recession is more, then in that case they reduces this repo rate. So this repo rate, again, it talk about how much money supply is needed in the economy. If there is more inflation in the economy, repo rate increases to reduce the money flow. And if there is recession in the economy, repo rate get reduced to increase the circulation of the money in the system. Next is non-performing asset. What is this non-performing asset? Whenever any kind of loan taken by a person or group or institution and they are not able to repay any interest, installment or principal, and 90 days got expired, banks generally called it an NPA. Now this NPA, if it keep on increasing, it shows that the financial health of the banks are not that good. So usually now whenever the banks give the loans, they'll take care of this proper KYC that their NPA should not increase a lot. Okay, so there is a term called as gross NPA and net NPA. Gross NPA talk about how much the overall NPAs bank is having, and usually banks keep on a provision, like suppose 100 crore is their NPA, so they keep a provision of 40 crore to take care of this NPA. So net NPA will be 60 crore, 100 crore minus 40 crore. So this NPA, if it keep on increasing, it shows that the financial health of the banks are not up to the mark. So the banks use these NPAs, they'll try to reduce these NPAs as much as possible. Then there is a term that is called as demographic dividend, and it is usually associated with India a lot. What is this demographic dividend? It talk about how much working age population a country is having. The more the working age population, that means they are supporting a lot in the economic activity, and it talk about that the current population is young and they are more responsive in terms of working ability. So India is having this high demographic dividend. What is the need of an hour? Is to provide them job and to provide them better skills. Then what is green growth? Green growth means GDP of a country keep on increasing, but it is very essential that increase in GDP along with sustainability is needed. And that's why after the Paris conference, there is a huge discussion on this green growth. And as a result of that, sustainable development goals also started. That is 17 goals, 169 target, and India even started their own SDG India index to promote this green growth. Because if the average temperature keep on increasing, it create the problem of climate change, and as a result of that, the surviving condition for humans as well as for the other living organisms is very tough. So that's why green growth is very quite essential, and government is focusing on renewable things, national solar mission, international solar alliance. All these are the part of this green growth. Then this green growth is associated with carbon market only. Whenever a country is doing more emission, and if any country is doing less emission or within the norms, then in that case the country who is doing more more carbon emission, they'll purchase the carbon credit from the lower emission countries. So this to maintain the overall balance in the emission norms. So this is carbon market. I hope friends you got to you understand these all terms. What are these specific terms that are mentioned in economic survey and budget. If you still need more clarity and you are not able to understand the terms, do mention in the comment. We'll try to reply them as soon as possible, so that you will get a complete understanding when you will read economic survey and budget. I hope that you like this video. So God bless you all. Take care, and please do like, share and subscribe. Thank you so much.